Hey traders! Today I'm going to show you what's on my charts that I use for swing trade setups. Now for me, a swing trade can be anywhere from an overnight trade to as long as a month. I prefer to keep my swing trades to about 2 weeks and under, but I will sometimes go out a little bit further depending on what I'm seeing. So let's take a look. Now, if you look over here on the far left side of my screen, you can see that I've got some internals. Those I mainly use for intraday setups though, so I'll save that for another video. Just to the right of the internals, I have my weekly chart. And then the main part of the screen will be my daily chart. So let's start here. I'm going to zoom in just a little bit. So the first thing I want to look at when I'm analyzing a chart is the trend. Is price going up or down or sideways? And where is price currently sitting in relation to the moving averages and the Keltner channels? So here we have, we're looking at the daily chart for SPX, and we can see it's clearly in an uptrend. We can see that because we're looking at the Keltner channels. I have my Keltner channels set up to highlight the daily 21 EMA, which is this middle white line right here. We often refer to the daily 21 as the mean. And then I also have the first, second, and third standard deviations from the daily 21 set up on my Keltner channels. Now, for most of my swing trades, I want to see a nice uptrend, just like we see here, followed by a reversion to the mean. And we can see that that happened right here and then right here. So as price goes up, it comes back down to the mean. So a great buy setup is when we've seen that reversion to the mean and we have a squeeze setting up, and I'll get to the squeeze in just a moment. Now, one exception that I will make to that rule of initiating a trade when price has come back down to the daily 21 is on SPX. So I trade SPX quite a bit, and I'll trade it really from anywhere, from intraday to a week out. And I'll also trade it anywhere on the chart, meaning even if it's all the way up here at +3 ATR, I can usually find some way to trade that, whether it's intraday, overnight, or even into the next week. But for most of my swings, I like to see price sitting between the daily 21 and then that first ATR. The next thing that I'm going to look at is the squeeze, which is this indicator down here at the bottom. If you don't know, this indicator was developed by John Carter, founder of Simpler Trading, and it identifies when price is building up energy during a period of rest or consolidation. Here's where it gets cool though. So once that energy is released, we typically see a greater than expected move. So we don't have a daily squeeze on SPX right now. So let's go back in time and I'll show you the last time that we did have a daily squeeze. So if we head all the way back to, here it is, February, you can see these red dots here on the daily squeeze histogram. That shows us that there was a squeeze building up. Now, normally the rule of thumb is that when a stock is in an uptrend, and at this point the SPX was, the squeeze is more likely to fire long. However, this is one of those rare times where it didn't follow that rule of thumb. If you recall, back in February, we had the new administration in the White House. There was a lot of that initial talk of tariffs that kind of freaked people out. So as the SPX started trading lower, what happened? The squeeze fired short. And just as it typically does, it went all the way down to -3 ATR. So that's what the squeeze tends to do, is once it fires, it'll typically move 3 standard deviations, but it can go even further than that. I do want to point something out though, because look at this. So it made this huge move, and then when it was time for price to rest, not go any further, what did it do? Came all the way back up to that mean, just like we talked about before resuming the downtrend again. Okay, let's go back here. So how do we know when the squeeze is over? So once you see the bars on the histogram, let me go back. Once we see those bars on the histogram change colors, that's how we know that the squeeze is over. So the squeeze was setting up here, it fired short, and it kept going. Once we got this bar color change where it changed from red to yellow, that's how you know that the squeeze is over. If you're in a trade, that's when you want to take your profits and get out. So let me show you Planet Fitness, because this has a great squeeze setting up right now on the daily and the weekly time frames. So you can see over here on the weekly time frame, see all those red dots? Beautiful squeeze, and we've got momentum shifting upwards. That's a really great sign. If we go over here to the daily chart, same thing. Beautiful red dots showing us that it's currently in a squeeze. Blue bars mean that momentum is shifting upwards. So this looks beautiful. Now, normally I do want to pick up price, just like I said before, when it's somewhere between the daily 21 and that first ATR. Price is just a little bit above that, so I would be breaking my rules if I opened up a long trade right here. An ideal spot for me to get into this trade would have been on Thursday, the 26th, right when it came back and tested that mean. But you never know, I might get another opportunity sometime this week. And if I missed the bus, I missed the bus. It's not that big of a deal. And then one thing that I want to point out too is we're actually running a special on the Squeeze Pro for the 4th of July holiday. So if you don't have this indicator but you'd like to, head over to our website. Don't worry, I'll post the link in the caption below, and you can get the Squeeze Pro for 20% off through July 11th, 2025. Let me go back to SPX now, because I want to show you the next thing that's on my charts, which is the quant pivots. And I'm going to zoom in just a little bit more. So the quant pivots are these lines. There are 2 red ones, a white one, and then 2 green ones. The white quant pivot, that just shows you where price opened up. So quant pivots take average moves within the selected ticker, but it's different than the more commonly used ATR because it looks at average moves higher within a given time period, and then also the average move lower within a given time period. So on my daily chart, I have the daily quant pivots, and over here on my weekly chart, I've got the weekly and the monthly quant pivots. So the weeklies are these smaller ones because these are weekly candlesticks. And then the longer ones, these are the monthly quant pivots. So here's how you can use them. Now, typically, we see price move between the H1, and H just stands for high, and the L1, L stands for low. Typically, we see price stay in this area between H1 and L1. And JC calls this range right here the sandbox. That's normally where price likes to play. Now, occasionally, if the ticker is having a big day, it can move up to the H2 or down to the L2. But this is typically where institutions will step in and reverse price. Think of this as a possible area that price can travel to, but once it gets to these levels, it's pretty extended. So it's a good idea to look for a reversal if price touches that H2 or that L2. And then just to show you how rare it is for price to even get to those levels, let alone close outside of those levels, look at these labels that I have up here. So if we're talking about the H2, it only touches the H2 11% of the time, and it only closes above the H2 7.9% of the time. If we're looking at those lower levels down here, SPX tends to touch the L2 12% of the time, but it will only close below it 6% of the time. So what does that mean? It means you've got really good odds that price will not close beyond those levels. So how can you take advantage of that while trading? Well, when price is at or near an H2 or an L2, I like to see premium, or I like to sell premium at those levels, looking for a reversal. So if price is near the H2, I'll sell calls, and if price is near the L2, then I'll sell puts. And in fact, I actually did that this past Friday, the 27th. So if we're looking at the weekly chart, let me zoom in right there, we can see that the weekly H2 last week, I'm recording this on a Sunday, it was up here at 61.89. And we opened up the day, price opened up on Friday at 61.50. So we were already pretty close to that level. So I went into the day knowing that if we got up high enough and I got a sell signal, that I would sell calls right up at this level. And that's exactly what happened. Price moved up throughout the morning at about 9 a.m. my time, which is Pacific Standard Time. We got a small sell signal on an intraday chart, and price at that time I think was at about 61.82. So I sold a call credit spread. I did that by selling the 61.90 calls, and then I bought the 6,200 calls against it to keep my risk low. I received about $5 in credit. I sold 2 of those contracts. Sure enough, price topped out at 61.87, which you can see right here before it finally rolled over. And I just let those calls cash settle because it was a 0 DTE SPX trade. So I was able to keep the premium that I collected in the beginning, which locked in a $1,000 profit for me in about 4 hours. So you can use the quant pivots on any time frame, and I even like to use them on intraday time frames for quick scalps. 2 hour, 4 hour, those are really good time frames for intraday setups. This is an indicator that I cannot do without because it really paints a great picture of price range for the selected time period. Really kind of paints a picture for you. Next up, I've got the Voodoo lines. Let me zoom back out here. So these horizontal lines that I've got right here, these are the Voodoo lines. This is something that I really just started using consistently about a year and a half ago, and now I can't imagine trading without them. The Voodoo lines were created by David Starr, excellent trader that we have over at Simpler Trading. They're based off of Elliott wave theory, and you use Voodoo lines as support and resistance. Each Voodoo line is not created equally, though. So the most powerful are the fire lines, which are red, followed by the tree lines, which are green. Let's see, do I have one? Oops, that's not what I want. Do I have a tree? Here we go. There's a tree line right down there at 52.21. That's the next most important or powerful one, followed by the snow lines, which are white. Voodoo lines also include sky lines, which are blue. However, I don't have them on this chart because I only use them on smaller time frames. The reason why is because sky lines tend to just be a pausing point. So if I'm swing trading something, that's not something that I really need to pay attention to. And you know what happens when we have too many lines on the chart, right? It gets a little muddy. So if we look at this fire line that was down here at 59.25, look at how price traded around it really for a couple of weeks. It was a magnet. Anytime price got near it, it would settle right in that area. And there were actually quite a few days in a row, well, not in a row, but there were quite a few days around this time period where I used 59.25 as a target in butterflies, because I knew that it would be support and resistance or just a magnet for price, and it played out really well. So if something were to happen and price were to come back below the mean again, I would definitely look at this fire line at 59.25 as being really, really strong support. I think something really crazy would have to happen in order for price to drop below that fire line. So, and as luck would have it, the Voodoo lines are also included in our 4th of July sale. So if you'd like to grab these as well, head over to our website at simplertrading.com and you can get these for 20% off through July 11th. And that about wraps up what I have on my charts for swing trades. I'll do another video for intraday trades, but for now, this is what I've got for swing trades. If you have any questions, please drop it in the comments below. And if you found this helpful, be sure to like and subscribe. If you want to trade alongside me, you can find me in the small lot trading room at Simpler Trading, where I help traders build their small accounts through options trading. Thanks for watching.